It's day one of close. You open your laptop. There is no documented schedule, no calendar, no dependency map. Just a mental list and a prayer that nothing breaks before Thursday. You know what needs to happen, roughly, but you don't know what depends on what, which task can run in parallel and which cannot. That's what this lesson fixes. 7 phases of a month-end close, what each one produces and why the sequence exists. A month-end close has 7 phases. Every company runs some version of these, in roughly this order. Whether you're in SAP, Oracle, NetSuite or Dynamics, the phases are the same. Your ERP handles the mechanics, period open, posting restrictions, Subledger Close sequences. You determine how the work flows between them. Briefly, before we move on, what each one does. Pre-close is about collecting the data from other departments and confirming systems are ready. Period end receives final day data that couldn't arrive earlier. Bank statements, FX rates, final revenue. Subledger Close processes all of that into posted journal entries. Consolidation pulls the trial balance and handles FX translation and intercompany elimination. Analysis and review is where the controllers team pressure tests the number. Reporting packages the results. Post-close locks the period and captures what to fix next month. We will walk through the detail in the workbook in a moment. Before we do, 3 terms you should know. Anyone new to close operations needs these. Experienced people use them without thinking about it. First, what is a subledger? AP, AR, fixed assets, inventory. Each one tracks a category of transactions and feeds the general ledger. When we say close the AP subledger, we mean stop accepting new transactions for these periods. Make sure everything is posted, confirm the balance is final. Second, closing a period. In your ERP, this means restricting posting so no one puts a July transaction into June after we have signed off. It's the lock that makes your numbers official. And third, a trial balance. This is the snapshot of every GL account at period end. Starting point for the analysis and the reporting. If the trial balance, the TB, is wrong, everything downstream is wrong. Here's what that looks like in the workbook. You are on the track sheet. Row 27, pre-close. Each phase header is a colored row spanning the full width. Subphases sit underneath it. Pre-close has 6 subphases: planning and communication, system and data readiness, data request, intercompany, accrual preparation, readiness check. That's 43 tasks before day 1 even starts. Let's go to task 1 to understand a bit better. Update close calendar for current period. And in column E, the deliverable is updated close calendar. Every task has one description and a deliverable. The deliverable is the tangible output that proves it's done, not work on the calendar. Done means updated close calendar distributed. If you've been managing your close from a flat task list, this will be the first time you will see the structure underneath it. Pre-close data request and early collection. 27 tasks. Every one of them is a data request to a team outside finance, whether it is operations, procurement, sales, HR, legal, treasury, tax, you name it. Column N says NVA for all these tasks. We will explain what this means in lesson 3. For now, just note the number. 27 out of 127 tasks depend on people who don't report to you. That's your exposure. We will quantify it precisely in lesson 8. Subledger Close. 7 subphases. AP, AR, fixed assets, inventory, journal entries, bank and cash, cutoff, quality, and close gate. This is where the actual accounting happens. Reversals, postings, accruals, reconciliation. Let's take an example. Task 51. Reverse prior paired AP accruals. The deliverable is prior accruals reversed. First task in AP. We reverse the last month's accrual so that we can start clean. And here we see that the owner is the staff accountant. He owns this task. Let's take another example. Task 61. Post assets additions, capitalized from CIP. The deliverable is asset additions posted. So this is in the fixed asset. It sits after AP closes. CIP capitalization needs the final AP amount. If AP isn't done, this task uses wrong numbers. That's the dependency logic we formalized in lesson 4. The other here matters, that's my point. Here we have AP before fixed assets. And in general, we need to have all subledgers before the close gate at the end. Now let's go to consolidation. Task 93. Pull the trial balance. That's the pivot point. Everything before it fits data in. Everything after it analyzes, packages, and closes out. Analysis and review. This is about the flux analysis, the balance sheet tracks, the controller review. Just after, reporting packages it for group and external. And finally, post-close locks the period and runs the retrospective, the return on experience. 127 tasks, 7 phases, 14 subphases. Your close might not have all 127 tasks. A single entity company with no intercompany might use 80. A complex manufacturer might add 20 on top. This library is a reference. The structure and the logic connecting the phases is what you keep. And here's the mistake I see from close leads under pressure. The controller says, close faster. Very nice. So the close lead runs AP and fixed assets at the same time. 2 teams, 2 work streams, parallel execution. On paper, it makes sense. Except, as we said, fixed assets include CIP capitalization. CIP capitalization needs the final AP amounts to know what to capitalize. If AP hasn't finished posting, fixed assets capitalize based on yesterday's, last month's numbers. Then AP finishes, the amounts change, and then fixed asset has to redo the work. So we didn't save time, we just created a correction that cost more time than the overlap saved. Same pattern with the trial balance, and maybe you have seen it already with your close leads. Pull it before all subledgers are closed and you get a TP. That just doesn't tie. You run flux analysis against wrong numbers and then you spend day 4 explaining why the P&L moved after you already reviewed it. The instinct is to go faster by doing more things at once. But speed in a close comes from removing waste inside each step, not from scrambling the sequence. If AP takes too long, the fix is to find out why AP takes too long, not to start fixed assets before AP is done. In Lean, this is the logic behind a value stream map. You trace the flow from start to finish. You find what depends on what, and then you find the constraints. You don't speed up a value stream by reordering the steps. You speed it up by reducing the friction inside each one. So here's your exercise. You open the track sheet. You scroll through all 7 phases. You customize the task list to match your close. Delete the phases that don't apply. As I say, if you are a single entity with no intercompany, delete the part where it is about consolidation. Add tasks that are missing from your close. If your team does something that's not in this 127 task library, insert a row in the right phase and give it a description and a deliverable. Then adjust the language. If task 51 says reverse prior period AP accruals, but your team calls it clear prior months GRNI, you change the currency to match. Same for the deliverables in column E. Don't touch the formula columns. If something shows an error after you insert or delete rows, leave it. We will address formula starting in lesson 3. Just get your task list right. This is the list you will map with SciPoc next. Again, great work in lesson 2. You can now see the task and the phases, but you cannot see who supplies each task, what they need to start, or whether the work adds value. That will be in lesson 3. We will map every task with SciPoc and classify it as value add, business necessary, or waste. That classification changes what you do with each task.